started. So I'm Joanna Looper. This is Will. Yes, we are married, and we help run Looper Team Mortgage here in Lynchburg. Our loan officers are Scott Martin. We have Brady Shorey. We also have John Murdoch, and we have other teammates, but we are the loan officers. And so if you work with one of the loan officers on our team, we're just hosting this Loans 101. And we're going to be talking through different loan programs that are available for every buyer, but then especially some that are available specifically for Virginia buyers. If you're a new realtor, this will give you a good glimpse of what exists for negotiations and seller concessions. We're also going to talk about what we do as lenders and how we figure out the best programs for our borrowers. And then we'll talk a little bit through actual like loan products that exist out there. We're not going to really talk through anything other than those items. This is a monthly webinar series that we're going to be doing with different items for our real estate partners. So we're just excited for you guys to be a part of it for our inaugural webinar talking about Loans 101. So I'm going to be kind of moderating, and then Will's just going to be answering questions and talking you through the loan programs. I do all the managing and business development here at our branch, and Will does all the loans. So we're going to let the loan master talk because I don't want to give you any information that is not true. And if I did, don't worry, he'd correct me and let me know what's going on. So, Will, tell us a little bit of how you got into the industry and how long you've been a loan officer.
This year, in a couple months, will actually be my 10th year. So we've got a full decade as a loan officer. Before that, for 2 years, I was a loan officer assistant at a local branch here in Lynchburg as I got into the industry. Um, it was purely on accident on my part. My wife actually, I was at a job that I didn't like, but paid the bills, and we had a small child at the time. And she was like, "Hey, we bought a house a couple months ago. They're looking for an assistant. Why don't you apply there?" And so I did, and I started 2 weeks later, and finally found my career at the age of 30. But yeah, that's how we got into the industry. And 2 years after being an assistant, a different company gave me the opportunity to be a loan officer and get everything started. So I grabbed that and we ran with it. And so we've been here. We started Looper Team Mortgage, our own branch, about 2 years ago, this past January. So we're a little two years in managing our own branch, but I can't imagine doing anything else at this point.
I love it. Thanks so much. So the first thing I want to dive into, Will, is I wanted you to just talk through just some basic. Well, first, let's ask this question. I want to ask a question for the chat. So if you can put in if anything, your response. The first one is what is the number one question your buyers ask you about financing that you wish you could answer better? So for our realtor partners, I'm curious about that. What is something that buyers are like, they'll ask you something and then you're just like, oh, I don't know, but let me text my lender really quick. Obviously, it is not your job as a realtor to know every loan product. It is not your job to know the guidelines. You don't want to say anything because you're not licensed. So you don't want to give too much information, but it is important to know some of the basics. But Will, just for fun, what would you say is your favorite loan product that you like to do?
Gosh, my favorite loan.
Yeah.
Um, I love, I mean, an $800,000 loan with somebody with 20% down and
Oh
an
yeah. Every
800 credit
realtor on this call
score.
would
That's
also
probably
like
my
an eight hundred
favorite.
thousand dollar loan.
Oh, the realtors are like, I love cash deals. Um, I think my favorite loan though that I enjoy is for a first-time home buyer, showing them how we can combine different programs, and somebody that might think that home ownership is out of the realm of possibility for them, they get an extra step or an extra hand, like, and I get to explain, like, oh no, you don't actually have to bring any money to closing, and we can use the state's money to get a lower interest rate, and we can do this, and there's just a ton of different programs out there that a lot of people aren't aware of. And so when we get into the nitty gritty and start combining different programs, that's the type of stuff that I really enjoy.
I love it. I love it. Well, the first thing I want us to walk through, Will, is just some different loan products. So if you could just quickly explain without any of our presentation slides, just go through like what is a VHA. I can pull up one of our, I'm going to send some notes over, but I'll share my screen and then Will, you can just walk through some of these loan products that we offer here.
Hmm.
They have some specific names um, that you may or may not want to use, but you can obviously like walk through these conventionals,
Yeah.
these kinds of things here.
So, I mean, the big four are your are conventional FHA, VA, and USDA, right? So you've got a standard conventional loan. FHA is the Federal Home Administration. VA is Veterans Administration. USDA is United States Department of Agriculture. So the same people that certify beef also lend money on houses, which is crazy. But um, underneath conventional, you can see on the slide here, we have Home Ready and Home Possible and Home One. Those are basically special versions of conventional financing for first-time home buyers, for people under certain income levels. They still make additional availabilities with conventional loans. And then down at the bottom, you'll see home style renovation. Home style renovation loans are conventional renovation loans. There is also an FHA 203K, which is FHA's version of renovation loans. But like I said, the big four are typically the four main versions of financing that 99% of the market is going to use.
Would you say that, and then with Virginia Housing, we will dive into that a little bit, but
Mhm.
which of these loan programs do they have in Virginia Housing?
So Virginia Housing is the state first-time home buyer program. They're basically a state-run mortgage company that does not have their own loan officers. So they rely on loan officers within the Commonwealth to do their loans for them. They have the same big four, conventional FHA, VA, and USDA, but they have additional benefits that go along with those four versions available for first-time home buyers.
All of the loan programs that you just talked about, conventional, FHA, VA, USDA, can you use those in any locations?
So most of them, yes, most of them do not have geographic restrictions. USDA is primarily in rural communities. So like in our area specifically, most of the city of Lynchburg, almost 100% of it, is not eligible for a USDA loan because it is not considered rural. Once you get into the surrounding counties, Bedford, Campbell, Appomattox, Amherst, that is where USDA becomes an option. There are still some areas within those counties that are not eligible for USDA loans, but if you're doing a USDA loan, it's definitely not within the city of Lynchburg. It's going to be in one of the surrounding counties.
What's the advantage of you using USDA other than, I mean, it's 0%. Obviously, it has to
Hmm.
be rural, but why would I use that over an FHA if I'm in Campbell County and I'm buying? Because it's just across the
Yeah.
street over here. We're all of a sudden
Yeah.
you're in Campbell County, and why would I use a USDA over one of the other products, or would you choose that over the other products?
Well, so there used to be a much larger gap between FHA and USDA. So Virginia Housing has a 0% down FHA loan. Um, they also have USDA financing. USDA mortgage insurance is slightly cheaper than FHA mortgage insurance. So if we're looking, like sometimes USDA has a slight advantage because of that lower monthly payment with the mortgage insurance. The problem is that USDA is also a little bit harder on the qualification side because they have a limit on so when you're looking at debt to income ratios, there's a front end ratio, which is how much your projected house payment is going to be compared to your income, and the total debt to income ratio, which is your projected house payment plus all your other debts like, student loans, car payments, stuff like that. Um, USDA's front end restriction usually makes it harder to qualify because of that, because your house payment can only be a certain amount of your ratios, Whereas Virginia Housing FHA, because it is zero down, it's still a good option. The only difference is that they do not have a hard cap on the front end ratio. So if you have very little other debts, you can still buy a higher house with zero down using Virginia Housing's FHA product. So USDA, while good, it's limited in how often it can be used just because of that front end ratio requirement.
Do you have to be a first-time home buyer to use USDA?
Not necessarily. You cannot own any other properties though. So if you're using a USDA loan, if you're selling a property and your plan is to buy another one, you must sell that house before you buy the next one. Whereas FHA doesn't necessarily have that restriction. Most of the time when you're using a USDA loan, you are a first-time home buyer, but it is not a requirement.
Okay, great. Awesome. Well, the next thing we want to talk through is seller concessions.
Hmm.
So, seller concessions are a huge negotiating tool, right? And
Absolutely.
you, I know I hear you talking on the phone all the time to realtors and talking them through and clients too, especially about should we use seller concessions? Should we increase the price or decrease the price or keep the prices and then ask for these concessions? I don't know. I just hear you talk about all of these things on the phone. And so I'm going to share this slide with you, and I'm going to be giving you guys all of these assets as well that we're working through. But this is a cheat sheet to seller concessions. So can
Hmm.
you talk through a little bit about those and what this
Yeah.
means for different loan products?
Yeah. So each type of loan product generally approaches seller concessions differently. So, I mean, realtors on this call, you're aware of what seller concessions are. It's asking the seller to pay some of the buyer's closing costs. When you're looking at a conventional loan on the left-hand side of this screen, you see the little graph. Um, the cap of seller concessions on a conventional loan varies depending on how much of a down payment the buyer is putting down. So if it's, a 3% to 9.9999 forever, the limit is 3% of the purchase price can be given as a seller concession. So if you're buying a $200,000 house, the limit is $6,000 if they're putting less than 10% down. Once you get to 10%, all the way up to 25, that limit is increased to 6%. So if you're again using that $200,000 example, the cap would be 12,000. Now, what's funny is like if you're at a $200,000 house, you're probably not going to need $12,000, but
Great.
we use what we can. Um, Technically, the way the conventional loans are drawn up, once you get over a 25% down payment, it is 9% plus. So it's actually not it's cap it's there is no cap once you get over 25% down. But again, seller concessions can only be used on existing closing costs. So we're never going to get to that point where we're going to have more than, typically more than 6%. But if we do have that availability, maybe we use that extra money to buy down the interest rate. Maybe we use that money to do a temporary buy down for, a couple years. There's a lot of things that we can do with larger seller concessions. So, but that's only on the conventional side. If you look over on the right side, it shows the fixed limit products. So FHA and USDA both follow the same rules, and that is 6% of the purchase price, no matter what. Um, if you're buying an investment property, the maximum seller concession is 2% of the purchase price. There is no tiered thing depending on down payment. That is a hard cap on a conventional investment purchase. Now, with VA loans, typically, the way that VA writes the guidelines, it's reasonable closing costs for the area. So the appraiser actually will look at it and determine, yeah, that makes sense. A lot of times the industry kind of uses 4% as a rule, but that is not a hard like a hard cap necessarily. That's just what most people use. So if you got to the point where we're, a couple $100, couple $1,000 over 4%, as long as it's customary for the area and we're not, getting exorbitant with the fees, then that's kind of the limit that folks look at.
Great. If you guys have any questions, throw them in the chat. Just let us know about concessions. The next thing we wanted to talk about, make sure my screen moves. Um, I'm going to skip that one, but let's talk about this, Will, with the Virginia housing,
Hmm.
um, and the rate reductions. I don't want to make it a complete Virginia housing phone call, but a lot of our first-time home buyers can use the Virginia housing as well as the expanded program, which is not first-time home buyers. So
Hmm.
if you don't mind walking us through these few
Yeah.
ideas.
Yeah. So Virginia Housing has, I mentioned earlier, it's kind of like the bonuses to the big four loan programs. So um, there are specific requirements for these different things. So, and like Joanna said, we're going to get into a Virginia Housing only webinar at some point. But they have two different programs for rate reductions. If you look over on the left-hand side there, the first is for first generation home buyers. It is a 2% rate reduction. So if rates are at 6.5, now they're at 4.5 for if we are able to use First Home Dream. There are also Spark funds. Spark funds are basically available on a first come, first served basis. That is a 1% rate reduction. So if you're at 6.5, you go down to 5.5. Um, one key thing, and I want to make sure everyone hears this, funds are limited for these programs. Currently, these funds in our area are exhausted, so we cannot get these things right now. However, annually they are refunded. The programs are, they are granted more money, and once those funds are exhausted, then that's it.
Let
We
me,
cannot use those anymore.
I'm going to pause you and ask you a question.
Yeah.
As you've been doing this for a couple of years, would you say there trends tends to be a trend on when it gets exhausted and if it gets reloaded? Like, do you think that if our realtors are working with first-time home buyers, they should really push them into the first part of the year so they can take advantage of these funds, or is it just does what have you seen in trends
Yeah.
in that sense?
Well, so Virginia Housing operates on a fiscal year. Ends June 30th, I think, not
Okay, July
31st.
to June type thing.
Yeah. So last year, Spark was refunded in September. Um, and Spark funds were probably exhausted by the end of October. I mean, they go quick. The First Home Dream, they just came out with that for the first time last year, and it was not geographically restricted. So any of the nonprofits that were sponsoring First Home Dream, like for example, very late in the year when most of the funds were exhausted, I had a single mom veteran that that she would have qualified for it, but the guy in Roanoke that we worked with to get First Home Dream had no more money. So I reached out to Virginia Housing. I said, "Hey, look, I know that everybody's out of money on this. I only need $159,000 for this purchase. Is there anyone that you could connect me with in the state?" And they got me with somebody like way on the western corner of Virginia, like, where it's like North Carolina, Virginia, Kentucky, or Tennessee, all close together. Kentucky. I'm not in North Carolina. My geography is terrible. Anyway, and they were able to provide that because they had just a small amount of money left to fund that. Whereas in Northern Virginia, you're looking at $600,000 houses, not 150.
Right.
Um, Now, First Home Dream and Spark are both geographically restricted. What that means is I cannot work with somebody in Manassas to get First Home Dream funds in Lynchburg. So, LINCAG, the Lynchburg Community Action Group, that's our local housing nonprofit. They did Spark funds this year for the first time. So, I mean, like
Like
we said earlier,
2026 or the
yep,
fiscal year?
the fiscal year. So
Hmm.
this past September was the first
Hmm.
time they ever had Spark funds. I've been doing this for, like we said earlier, 10 years. Spark has never been an option in Lynchburg because we did not have anybody local to us that was participating in the program. But uh, Lencat got money and we tore through it really quick. Um, Roanoke was previously utilizing Spark and we were in their geographic area. They did not do Spark this past year, but they did do First Home Dream. Those funds, to my knowledge, have been exhausted.
So
But
would you say that people should will allow, do you think they should wait to take advantage of these funds, or do you think that that's just, it's great when it comes up?
it's great when it comes up. I never think somebody should wait,
Okay.
mainly because if you find a house that you love and it's not going to overextend you on payment and you can buy it, great. We can do that. We can get lower interest rates, when we refinance whenever the market comes back down. Um, when they are available, it is a huge incentive. It's a huge incentive. But if you find a house that you love and it serves your family's needs, like don't push that aside waiting to get a cheaper payment because there's no guarantee that when those funds come available, a house that fits what you want is going to be around, right?
Yeah.
So,
Well,
yeah,
since you
it's
talked
it.
about some of those programs, I want to talk about what I think one of the things that our team is the best at is architecting the deal and
Hmm.
how we look at concessions and different products and layering them up together. So, talk us through if this was like a we do want to do a caveat that the Community Heroes grant is exhausted right now, and we are putting this in this slide, which to the chagrin of Will, he was not happy that I was using this, but it might come available or the spark might come available. So it is something that we can just put in there. Just remember that is a grant that is extra with the Virginia first time home buyers. But
Hmm.
Will, talk us through how you like to and our loan officers on our team, like architecting a deal and making like the best bang for the buck for our clients.
Yeah. Well, I actually had somebody that closed yesterday, and I'm going to use him as an example.
Okay.
He came to me. He was a very limited credit history borrower. He did have a good credit score, but he only had one trade line with like 10 months. So a conventional loan was not going to work for him. We went the FHA route. So with his deal, he had saved up some money. He had decent credit and obviously not much debt because he only had one trade line. I asked him, I said, okay, how much do you want to come out of pocket? He said, I want to use $12,000 for my purchase. I was like, okay, um, here's what we're going to do. We used a Virginia housing loan, a Virginia housing FHA loan. We did not go the zero down route. We used the 2.5% grant for him. And we were able to negotiate a $14,000 seller concession on a $300,000 home. So we went up on the purchase price a little bit to
So
make the
in
deal
this
work.
top box, you would say here, that's where they got the $14,000.
Correct.
Okay.
So they
And
got the
then,
$14,000, and then the state power up was that 2.5% grant. So he
okay.
actually got like $7,400, I think. So, excuse me. So we had his money that he had saved up of $12,000. In addition to that, we had $14,000 of seller credit and $7,400 of grant money. So in addition to his 12, we were able to get another $21,000 to make this deal work for him the best. So what we did was we basically used that seller concession and the grant. We covered all of his closing costs with the seller concession. We used the grant money to buy his interest rate down to 5.375. So he has a significantly below market rate. And we structured the down payment so that he was only bringing to closing his $12,000. So instead of him just saying, yeah, you know, I need a 3.5% down payment. Let's see, actually, what's 300,000? 3.5% would be $10,500. That would, he would only have $1,500 more to reach his maximum out of pocket. But thanks to how we layered the different programs and how we structured the deal, getting that seller concession from the seller, we were able to get not only into the house with grant funds, we also got him into the house at a 5.375% interest rate. So his monthly payment is significantly below market, and he still brought the exact amount of money that he wanted to bring to the table at the first place.
Nice. That's pretty
Hmm.
awesome.
Yep.
That's like a huge win. I love it. Um, the last thing that I kind of want to talk about is when you're looking at loan programs and you're talking through them with different realtors and the offer letter goes with our pre-approval, do you find that there are loan programs that you feel like are more attractive? Obviously, cash always, but we're not in that world. We're loan officers. We want to have, most people can't do cash loans, but do you ever try to put people in certain loan programs so that the offer is more attractive to be accepted?
Hmm. Yeah. So, I mean, every realtor that's been doing this for a while knows that when you're on the seller side, you want to see a conventional offer more than you want to see an FHA or USDA offer. VA to an extent, because FHA loans and USDA loans have specific appraisal requirements that the house has to meet. Recently, actually, I think this week, VA sent out a thing saying, hey, as long as the house was not built before 1978, we don't care about chipping and peeling paint. So the VA has really reduced some of their requirements on the appraisal side to make a VA appraisal a little bit closer to what a conventional appraisal requires.
Do you think those
Um,
VA people can talk to the FHA people and help out with that chipping paint guideline?
yeah, I wish. Geez, it's so obnoxious sometimes. It's like the house was built, 10 years ago. There's no issue with
Sure.
lead-based
Just
paint, but
like,
whatever.
right.
Yeah.
It is what it
Um,
is.
yeah, don't want those kids eating paint. So, but FHA and USDA are still good options. Like we don't necessarily have to have the concern that we do when we're looking at, like it may mean having to paint like a deck, a side deck or something like that, which even just like the side of the deck, it's like a $5 can of paint. So it's not like it's a huge requirement. But on the seller side, if we're looking at a conventional loan, that's what people want to see almost every time. Um, a lot of first-time home buyers do not use conventional loans, though. So what we do is we figure out a way that best serves both sides without the seller giving an arm and a leg to get rid of the house, but also still getting a fair deal for the buyer.
And one caveat for everyone on my team that is a loan officer, we also make sure all of our loans are closed, if not before, on time. So that
Yeah.
goes before those pre-approval letters. Um, we did have a question. Someone asked about can we combine different grant programs
Hmm.
or the stacking of those things with Virginia first-time homebuyer loans?
Yep. So Virginia Housing does allow additional programs that they do not have to be used on their loans. So the one that we probably run into the most is LINCAG. The Lynchburg Community Action Group has a program called the Home Grant. The way that the Home Grant works is you can actually get up to 10% of the purchase price of the home. For you have to be a first-time home buyer, you have to have a good credit, be in good credit standing. You do also have to be under a certain income limit, and that depends on the household, the size of the household. So, like a two-person household is going to have a slightly lower income limit than like a six-person household. But the LINCAG grant can be used in addition with Virginia Housing. So we had somebody close, I think in January, who qualified for both. It is only available within Lynchburg city limits because it's a Lynchburg city grant. But they were able to use the Community Heroes grant while it was active, which, pour one out for my homie. I love that grant. I hope it comes back. I'm sure it will someday. But that was a $10,000 grant because they were a community hero. They worked at a hospital. We used LINCAG. LINCAG, I think the house was about $250,000, so that was 25 grand. So we're up to 35, and we used the FHA down payment assistance grant, so 250, about 7,000 more dollars. So this person was able to get into the home with $42,000 that they did not have to pay themselves.
Okay.
The grant, the Community Heroes grant and the down payment assistance grant is free money. Here you go, and ta-da. The LNCAG home program, what they do is they provide a second lien um, on the home worth 10% of the house's value, and then over a 10-year period, every year that lien is forgiven by 10%. So if you live in the house 5 years and you bought a $200,000 home, you got 20 grand. You live in the house 5 years. When you sell the property, you only have 10 grand left on that. If you live in the home the entire time, then that grant is completely forgiven. The idea behind it is that you're in the Lynchburg community, you are spending money in the Lynchburg economy, thus the time period on how often it is forgiven. So,
Awesome.
but it's a great
Awesome.
program for those that qualify.
Well, great. Well, those are just kind of a quick overview of loans, and we're excited. We're excited about this webinar series. And if you
Mhm.
guys have any questions, our information will be below, and you can email will.looper@home.com, and he can answer all of your loan questions. He's just
All
like
of them, every
he's
single
the
one.
chat GPT for loans.
I don't know if
We
I'd
we
go that
do we
far.
did build out you. Did you know that we built you out 2.0?
Yeah,
Will
there's
to
a Will Looper 2.0,
Yeah,
an
John
AI
did it
version
on
of
our
me.
team. Yeah.
Probably
He asks
sends way too
questions
many
all the
smiley
time,
faces on email.
probably. All right. Well, thanks everybody
Perfect.
for joining us. I'll be following up with email with some assets from the digital assets that we have with seller concessions. We're also going to post this on YouTube so it can be accessible. And we hope you have a great Friday.
Oh,
I see it,
oh
Selwyn.
gosh. No, I don't want to talk about rates.
Rates are not good right now. The
So,
economy is crazy. There's war. It's just a little nuts right
so,
now.
well,
I'm
okay.
going to stop.
So
Hold on. I'm going to stop recording.